Hello, this is Simon Thompson, Vice President and Wealth Advisor at Texas Legacy Wealth Management. Welcome to our monthly market update for May 2014. We're going to walk through the major market events of the month. Securities offered through LPL Financial, member FINRA SIPC, investment advice offered through Texas Legacy Wealth Management, a registered investment advisor and separate entity from LPL Financial. May started with mixed news, as a positive jobs report brought optimism, while concerns over the Russia-Ukraine conflict continued to weigh on market participants. During the first couple of weeks of May, the trend of high growth and more richly valued sectors struggling relative to broad market indices continued. Small caps approached correction territory mid-month as they were down roughly 10% from their recent peak and ended the month up approximately 1%. On the Fed front, rate hike expectations have continued to fall, whilst hearing dovish comments from Fed officials. Expectations for a rate hike are expected by many to begin in May to June 2015, according to Fed funds futures. This has likely contributed to persistently low interest rates. Earnings season wound down at the end of May, while grabbing its share of headlines throughout the month. We saw a good, not great earnings season where 68% of companies beat earnings estimates, and earnings grew at a 5.5% clip. Perhaps more importantly, forward earnings estimates rose modestly, in contrast to recent earnings seasons where we've seen estimates decline. First quarter GDP growth was revised down to -1%. The market seemingly shrugged off poor, backward-looking GDP data and looked forward to improving economic data and earnings as the S&P 500 finished the month up a little north of 2% to close at an all-time high. Stocks closed the month more than 10% higher than the lows of the year seen in early February. While stocks had a good month, bonds were also positive, as the Barclays Capital U.S. Aggregate Bond Index rose 1.14%. The U.S. 10-year Treasury yield has continued to drop this year and closed the month at 2.48%. We expect that stock market volatility could increase throughout the remainder of the year and view any further pullbacks as buying opportunities, as we don't see a recession emerging at this time. We believe now is a good time to review your equity portfolio allocation, as we believe a move out of U.S. small cap and mid caps into large caps may make sense based on where we are in the current economic cycle. We find the first 5 months of 2014 mostly in line with our 2014 market outlook. As a reminder, you can view our 2014 market outlook at our YouTube channel. For more information about Texas Legacy Wealth Management, you can contact us via phone, email, or feel free to visit our website. We would also like to remind you to follow us on Twitter and like us on Facebook.